What a crazy day today in the market. This is our daily market recap, and I want to talk about what happened today. Obviously, it was our FOMC meeting, and any high impact news event like this is going to cause a lot of volatility within the market. So we want to understand how to read and interpret the market during those times and make trade decisions. And today it was very interesting because if we measure balance within the market, you can see that the S&P 500 actually remained balanced throughout the entire session. This is very uncommon during especially FOMC, CPI, any really high impact event. Now, knowing that, trading individual stocks, most stocks are going to follow trend of the overall market. Some won't. There were a couple trades I took today on balanced stocks and a couple I took that were on non-balanced stocks. So if we're trading a stock that's balanced, we want to understand that we're able to trade a mean reversion strategy. And that's the analogy of going out and trying to catch a bunch of small fish. You're going to come back with something every day versus when you go out and you try to capture a vertical move, that's like going out and trying to catch a tuna. Most days, you're not going to come back with something. So off of the open today, we saw a quick rejection on our top VWAP. We pulled below our mean and we spent about half of today's session up until just about 1 o'clock here, where we did break above our middle VWAP. We spent most of the session trading below. So very bearish trend on the day. And again, we were balanced, so we traded along our 8-day EMA, which meant we moved off, came back to it, moved off, came back to it, moved off, came back to it, right? We just traded around the whole day. Now, FOMC, 2 o'clock, we saw this large move off of our mean up to our red band, up to our green band. So based off of that, once we saw a higher bar on a higher band, that was a higher true high, right? We want to consider that a true high. Quick move off of that higher true high back down to our lower green band. And we got a lower true low. Now, keep in mind, market remained balanced. We then saw a bounce back into our mean, and then we traded up. We formed a lower bar on a lesser band. So you can see here, higher bar on a higher band because this bar was higher and we traded to our green band. This bar was lower and we traded to our red band. Being able to come in here, obviously watch that clear move from highs to lows back to now. What is this? This is a false high or just not a true high. If this was a higher bar, okay, formed on a higher band, that would be a true higher high, which it was not. And then we saw a move back down into our mean. So you would assume this was a very easy move to trade. It wasn't necessarily maybe using our band system. It would be, but if we just look at MACD, we're all over the place. We saw MACD cross at about 115 today. And that was, again, prior to FOMC. We saw obviously this push here up into 662 on SPY. This was just moments before FOMC. News came out here, started to pull back, and we saw a pretty consistent pattern. Okay, so lower highs, lower lows, lower lows. And that was validated here by, I wouldn't say necessarily volume would give us too much, right? We were kind of all over the place. There were people getting involved, people not getting involved. That meant our MACD here was converging and diverging, or got close to diverging, but ended up diverging on that last push down. Didn't quite diverge here. So this would have been really challenging to trade just looking at MACD. But using VWAP, this would have been a little bit easier because we knew that we reverted back to our mean. So at that point, this would have been like a neutral, hey, let's stay flat. And then we started to push off. When we started to push off, and keep in mind, it's probably generally the best to not trade around FOMC because it is going to be a lot more volatile. It is going to be a lot harder to trade. You are most of the time going to be trying to capitalize on a vertical move, which again, today it was not. We just traded around our mean. So we did push a bit higher. We came back into our mean. If we zoom out and we look at the bigger picture and we are able to actually see, hey, by using all of these four things together, well, could have we assumed what was going to happen in the moment? Yes, probably. For me, coming into the session today, I was aware obviously of FOMC. I did take a couple of trades today, and a couple of them that I did nail very well. And one of them I wanted to talk about specifically, which was CMG. Now, I did take some puts on CMG, and let's talk about what I saw here. Now, this was keep in mind, during our FOMC meeting. Now, it doesn't mean because there is an FOMC meeting, you can't make money. I'm just saying it is higher risk. Now, CMG, we saw open rejection off of upper VWAP, crossed over our mean, back into our bottom VWAP, back up to our mean, traded on our mean, went flat for a bit here. Market decided CMG, a little bit underpriced, pushed this thing up. Obviously, that was also correlated to FOMC. Highs there at 40.25. You can see my entry here and my exit here. So I was able to capitalize on this move to the downside. And I was able to use our envelope system and see that high, 40.25, was a false high. How did I know that? Well, if I look back at our open, we pushed up to our blue band, we touched our blue band, and we saw 2 bars closing above our blue band. This was a higher share price on a lower band. You could see how we did not actually touch our blue band upon forming a high. And then we saw a quick rejection back down to just about our mean, which is where I decided to get involved. Knowing that we were still balanced, I then anticipated a move back down to green. Why did I anticipate a move down to green? Well, it's because it was the same thing that happened during the earlier session today. We charted true higher highs on a high band, moved down to our mean or 8-day EMA, and then we moved down to green. So you could see that. So I was just trying to play the same setup here, knowing that this was a good place to obviously get involved on this 10-minute bar right here, and then capitalizing on that reversion off of our mean. And I even was able to hold this thing a bit longer because we reverted down to our green and then gave it a minute. And you could see how we charted that bar on our golden band and then our purple band. So was able to squeeze a couple more % out of this trade. Got out of it as we started reverting back up to our mean. And you can also, at that point, look at VWAP. We were pretty close to bottom VWAP. So we know we go from high to low to mean to high to mean to low. So at this point, what should we expect? Well, we should expect low to mean to high, right? So we saw here within this, call it hour time period, this was mean reversion, high to mean to low to mean. And we moved back up to, it took a minute here, high, back to mean, back to low, back to high. This was around lunchtime, right? When we kind of got flat, and you would have seen that reflected on the volume. If we look at volume around lunchtime, you can see here how things really died down. And then we got that pop up to highs, played the move back down. We knew to get out here because we expected a reversion back up to our mean, and then after market, we've reverted back up to our high tide. So if we want to name this setup, this would be a high tide to low tide, right? Because we traded our high tide to our low tide. Now that is today's recap. If you guys want to see me trade live every single morning and have access to see and copy my trades, I'll put a link in the description below to my mentorship. Subscribe for more, and I'll see you in tomorrow's video.